Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Boland. I am the aggressive growth stock strategist, and I'm here with my top stock pick for the week. Later on, we're going to have Kevin Cook giving his. But here's an interesting one. I'm going with Amazon. AMZN is the ticker. And oh my gosh, would you look at this? It's a Zacks rank number 5 strong sell. When have you ever heard of us talking about a stock that is a strong sell like this? Well, I figured this was a great time to go into two concepts. Number one, a strong sell, what's going on with that. And then number two, the really big news around this stock for this week, and that's the stock split. So you may have been an investor in Amazon. You may have noticed the other day that it was, $2,000 a share or more. So 2,000, I'm going to write it there. But then it was a 20, so we'll knock that off. 20 for, oh boy, this is terrible, for 1. 20 for 1 split, right? And I think the important thing here with the concept of a stock split, just to make sure that we all are on the same page, is that this is just a mathematical equation. The number of shares changes, but nothing else inside of the valuation or the value of the company or the sales or anything else changes. So the number of shares changes, that's it. You suddenly have more shares. Your ownership is the exact same. And all it does is it impacts the stock price and it brings it down. There's reasons for this. You want to bring the retail crowd into this trade. You want to do things like that. Other times companies will do this to make sure that there's enough trading volume in their name to stay listed on the stock exchanges. Amazon doesn't have that problem. Clearly, they're looking to just get more retail into the name. That could mean that there's institutional sellers that are looking to move in on this stock now, but you never know. But obviously, Amazon is a gigantic company. There's a lot going on here, but I think the thing that stands out right here is that 234 times forward earnings multiple, still super, super high. And look at it. Look at this market cap, $1.2 trillion. That is a lot, and you can see the average volume has really, really shot up here. So normally we have this little run up into a stock split like this, and you can almost kind of see it with Amazon there. So there might be some immediate selling pressure on the name, but at the same time, that's why I think that there's going to be a lot more retail jumping into this name. So let's just go run through why this is a Zacks rank number 5. And the first thing that I love to do is take a look at the earnings history, and we see a beat and a miss and a huge beat and a pretty good sized miss there. So a little so-so there. That's not going to make the Zacks rank do much of anything with those misses there and beats. But here's where the Zacks rank really cares. 59 cents down to 14 cents. Oh boy, my little guy got there. And 65 down to 35. So that's going the wrong way like that. This is going the wrong way like that. And 242 to 53 cents. Going the wrong way like that. But let's think about this real quick. Is this a function of the stock split? And our numbers just haven't caught up yet, and that's very likely the case here, and I think that's why estimates kind of moved in this pattern. We're not expecting earnings to drop by 99% this year for Amazon. That would be, over the top. Sales expected to grow at 11% this year, 16% next year. So like all things, you have these problems with these stocks where suddenly there's a change in the number, and these websites like Zacks, like many others, just can't keep up with it. So the important idea is that if we look at the sales numbers here, so 7% last quarter, price to sales is going to be the same thing at 2.6 times. Operating margins, Amazon keeps it pretty slim in there, but this number, gonna have to change. And I think when we'll really see the impact of all this when we take a look at this final shot here, this line right there, that has stayed consistent. So that is fully adjusted for the stock split. Have the earnings numbers, maybe our system just hasn't updated yet for the stock split because, earnings aren't going to just fall off the hook here and just completely fall off the thing. So that's why I wanted to talk about this stock. So you're going to see a lot of misinformation in and around the stock split. This is one of those instances. What you are going to see is people moving into a stock like this because they now believe that it's cheaper for some reason. It isn't cheaper. It's the exact same thing that it was yesterday or the day before, but there's just more shares available. So that's an important concept to keep in mind. So with that, I am making Amazon my top stock pick for the week. I'm going to throw it over now to my friend and colleague, Kevin Cook, for his views on a big crowded name. Take it away, Kevin.
Thanks, Brian. My top pick this week is CrowdStrike. All right, so I was telling my folks at Taser Trader to buy CrowdStrike last week after earnings. Would have been nice to buy it before earnings, but in this environment of companies being guilty until proven innocent, we waited. And the beat and raise was just what we wanted. Lots of good upgrades and price target bumps. Morgan Stanley had actually last week, right after earnings, bumped their price target to 195 on CrowdStrike. And then on Monday morning, after reviewing the numbers again, they came out and said, we're going up to 215 and upgrading the stock to overweight. So that's how excited the analyst at Morgan Stanley was. And CrowdStrike, we're talking, the premier cybersecurity defender, specializing in endpoint security. So when you think about all the devices out there at the edge of the cloud and IoT, they specialize in that. Jefferies raises their price target to 215 from 200. D.A. Davidson had to lower. We're seeing a lot of this, right? Analysts are, having to retrench. And it's mostly about valuation, just to get in line with what investors are paying, what multiples they're paying. So D.A. Davidson lowers the price target to 235, but keeps a buy rating. Oppenheimer and BMO both really like the quarter too. Majority of the analysts are big here. So here's Oppenheimer having to cut to 250 from 300. Same situation as D.A. Davidson. Separately, RBC Capital Markets said CrowdStrike remains one of its favorite ideas and the most impressive model that they've seen at scale, continuing to deliver on both growth and profitability. They raised their price target to 232 from 225 with an outperform rating. Let's take a look at the chart and then we'll look at the estimates. So here's a weekly chart of CrowdStrike. And what's interesting, what I've been talking to my people about is, the stock market is rushing to price in the probability of a recession. We have no confirmed recession yet, and I don't think we will. But, software got super bubblicious. Here's CrowdStrike coming back to, 140 would have been a great place to buy it. But, it was hard to sift through the rubble a couple of weeks ago. But what I want to note here is, when's the last time CrowdStrike spent a lot of time around 140? In this 2-month consolidation here, because this is a weekly chart, this is Q3 of 2020. So after the Corona crash down here, we get this little run up and consolidation before the big run up in 2021. You're seeing a lot of software do that. So let's compare, and right now look to the right of the chart here. CrowdStrike has just taken off. Last week after earnings, shot up to 176. Back down to 160, so you got one more chance, and that's what I told my people to look for. And then we were finally buyers yesterday under 170, and we're getting a nice move up here to 180. So let's just take a step back and look at, while we're on the price chart here, the industry. So I'll use the proxy of the Hack ETF for cybersecurity, and it dipped well into this. Here's the 2-month consolidation of Q3 of 2020. That's where you're seeing support for a lot of software that got bubblicious. And so I think CrowdStrike is a leader in cybersecurity that you want to own. So it's a Zacks number 2 rank right now as estimates have climbed. Let's just take a look at the detailed estimates. So for sales for this year ending in January of 23, 51.7% growth. And this reminds me, another key thing about this report that the analysts love was the annual recurring revenue growth. ARR is key for these SaaS companies, and that ARR is a steady 50% for CrowdStrike, even into next year. So even though right now, we're looking at nearly 52% growth, and they're going to do $4 billion a year from now, as only, that only looks like 36% growth, but those numbers could move up as long as the ARR is maintained. Profit-wise, nice profitability, moving up 71% this year to $1.15, and projected another 44% advance to 166. So that's why I like CrowdStrike, and I think you can buy it here, right here at 180, and any dips under 180, looking for 220, 225 in the next 6 months. Thanks for watching this week's Top Stock Picks. And for more goodies from Zacks.com, go to Zacks.com/promo to see what we're offering this week.